Alrighty guys, welcome back to another lecture. So this lecture is going to be very simple. It's about fair value gaps, BISIs, and SIBIs. What is a BISI? A BISI is a buy-side imbalance, sell-side inefficiency, and a SIBI is a sell-side imbalance, buy-side inefficiency. Okay? So I don't know, I forgot to put buy-side, but sell-side imbalance, buy-side inefficiency. Okay? That's all it is. So what does that even mean? Because obviously on like paper that just like you're like, what does that even mean? Well, it's very simple. So I'm gonna go into a chart and I'm gonna show you. Let me just find a clean example where I can show you guys. Okay. So my blue candles are upwards candles and my black candles are downwards candles. So a sell side imbalance is going to be when there's two candles overlapping the middle candle. So as you can see, there's an imbalance between these three candles and this one right here. So there's an empty void, just like an empty space within here. That is called a fair value gap. Now, why is it called fair value gap? Because price has to rebalance inside of this void, inside of this inefficiency, to offer fair value. So it has to revisit and rebalance to offer fair value so the marketplace can either move lower or higher. So if we move higher and we disrespect it, as you can see here, we have closed above it with these bullish candles, pretty much disrespecting it to move higher. So that is just called inverse fair value gap. Yeah, IFVG, inverse fair value gap. So we have this sell side imbalance in here, followed by this candle, and this candle. Okay. I also kind of teach like another way to look at a buy side and sell side imbalance, and that's going to be in a lecture called BISI, SIBI, Disrespect. But for now, this is what makes up a fair value gap, just this empty void within here. Okay. It's that simple. And the same thing for a buy side. We have a fair value gap resting in here. So we have an up close candle, another up close candle, followed by another up close candle. Now, if you notice, we don't have any wicks or anything within this empty void here. So, for instance, if I look at something like, let me see, like this down close candle right here, there's no imbalance within this range. This candle and then this candle overlapped this candle, creating no imbalance, so there's no sell side imbalance within this range here. Now, another example of price rebalancing into inefficiencies algorithmically would be like this one right here. So we have a tiny imbalance right here. Price comes up, rebalances, offers fair value to then go lower. Okay? So that's all a fair value gap is. It's just an open void, and it's going to be very important. I'll explain later on in the lectures of why they're important, looking at the respect and the disrespect of them. And then also one more thing I'm going to drop is the midpoint of a fair value gap. So on your box tool right here, you see how I have a middle line. Now, if you guys just double click it, go to style, you guys can enable it right here. So you want that enabled. Now, this middle line is very important because a lot of the times price will come into this middle line, tap it, reject off of it, and that's a pretty good sign that price could continue higher. So this middle line is called consequent encroachment, CE. Okay, so CE, that's just the midpoint, consequent encroachment. Now, if you guys want more of like an in-depth lecture, you guys can just go watch ICT on YouTube about a fair value gap, or just honestly anyone. It's the most simple concept that ICT teaches. And if you don't know who ICT is, he's called the inner circle trader. He pretty much created all these concepts that everybody trades off of. Not everybody, but the ICT community. And then that's what I've personally found success in. So, and that's what I teach. So CE is the midpoint of the fair value gap, consequent encroachment, and then you also have this imbalance right there. And then another example of price rebalancing into an inefficiency and then coming out of it would be this one right here. So we have a rebalance into the inefficiency, and then if you notice how this body right here didn't close below CE, the midpoint, disrespecting it, because typically when price closes below CE of a fair value gap, that's kind of disrespecting the whole narrative. So this came down, had an entire fill of this buy side imbalance, sell side inefficiency, because this is on the buy side of the curve. and it's doing sell side inefficiency. This is sell side of the curve. So sell side, buy side. Rebalance, displacement, taking out the draw on liquidity right here. Okay, so that's pretty much all it is. Another example, price came down, filled this fair value gap, displaced higher. So fair value gaps are very important. Pretty short lecture on how to identify fair value gaps and pretty much what a fair value gap is. You're obviously going to need them. This is just step one in the process of learning. And that's pretty much it for this lecture. I'll think of a couple other things I can teach you guys. But overall, the model is very simple. If you guys just start spamming the lectures, you're going to understand it like the back of your hand. But this is just what a fair value gap is. Okay, so BISI is an up close. It's buy side of the curve, buy side imbalance, sell side inefficiency. A SIBI is the sell side of the curve. So downside of the curve right there. Okay. And there's fair value gaps on every time frame. So if we go on the 4-hour chart, you can see how we do have fair value gaps on pretty much every single time frame. But you guys don't have to worry about higher time frame like that with my model or the model. So yeah, that's pretty much it. Very simple lecture. I'll think of something else that I can explain that's very simple and the way you guys will need to know. But overall, if you guys just start spamming my lectures, I have the foundations to my trading. So the macros, which you guys will see, the trading rules, manipulation, the displacement, reversal, continuations, going from internal to external, or sorry, internal to internal, external to external. This all might sound like gibberish to you right now, but don't worry, you guys are going to get the hang of it very, very soon. BISI, SIBI, disrespect, which I briefly explained here, but I explain it a little bit more in depth in another lecture. Rebalance, I have a whole lecture on rebalancing. So something like this. So we have this. So rebalance, displacement. You guys will see everything that I teach. The order blocks, standard deviation and Peter raise, protected stop loss and take profit, how to frame your bias narrative, and then I have the model. Pretty much explains the model in depth completely, in the most simplistic way I can possibly explain it. So that's pretty much it for now. I hope you guys enjoyed this lecture, and peace out.